And we are live.
Good morning, everyone. It's the one, the only Senor Silverback, aka the Gorilla, coming to you live with my main man, the master of the flux capacitor, the producer par excellence. And we're back on another Rogue Money Mornings where we give you the news, the views, and all the information that's important to you from around the world to your neck of the woods. With that being said, check us out on roguemoney.net. Follow us on Twitter at The Rogue Money and Rogue Money Facebook, not to mention every single podcasting app known to mankind. You can also check out our sponsors, myfreedomnow.us, myfreedomnow.us. Whether you need money for investments, a dream business, or getting out of debt, or whatever the heck you want to do, myfreedomnow.us can help you get up to $600,000 unsecured with their network of 335 lenders. Also, they can help you get out of debt and fix your credit score and protect you from the collectors all in one shop. Also, check out mygoldusb.com, mygoldusb.com, where you can surf the internet with 1024-bit military grade encryption. You can secure your Bitcoin wallet. You can message, you can email, you can browse with Edward Snowden levels of suave and swagger. So check out mygoldusb.com. With that out of the way, CJ, what's crack-a-lacking?
Hey, good morning, V. Fired up and ready to go. How you doing?
I'm doing good. The dark roast is coursing through my veins. The caffeine is stimulating my synapses, my friend. I'm fired up.
That indeed. That indeed.
Uh,
Yeah.
oh,
So yeah,
man.
pumped up for today. You know, Hump Day.
Yes.
Yeah. So today's Hump Day with Bix, and you guys haven't been together in,
I know.
gosh, I think it's been 3 weeks.
It's been like 2 or 3 weeks, man. I miss him, bro. It's like, I want to give that furry man a hug. Just
I know the bromance needs to continue today,
the
V.
bromance is rekindled once again.
Yeah, and then as far as the trading teardown with Dex, we will try our hardest to get that rescheduled. Just couldn't
Yeah.
coordinate yesterday, but we don't want to
Well, you know,
disappoint our
you know what
listeners.
it
So
is,
we,
man. It's the summer.
yeah,
Everybody's vacationing and traveling, and it's totally cool. We'll figure it out. We'll get Dex on sometime this week. We'll see how
yeah,
it
it's all
goes.
good. Yeah,
Yeah.
even if he has to join us for the Friday radio broadcast, we'll make it happen.
Make it happen, man. We'll rock it out. We will rock it out like we always do. So, what's going on with you, bro?
Well, it's hard not to buy into the narrative that we keep, getting in the MSN with the divide and conquer, all the distractions that
Oh
are
my God, man.
occurring. V. However, when you take a look at the real economy in the U.S., we start to see,
Mm.
not only cracks in it, we're basically seeing sinkholes
Oh my God,
occurring
yeah.
in a lot of places. And one of those, V, is the Manhattan luxury real estate economy and what's happening there. You want to break that down?
Yeah, basically what's happening in my own backyard is this. Look, guys, here's the deal, all right? A lot of people will think of Joe Public, John Q. Public, and his wife as the purveying example of the canary in the coal mine with, like, let's just say, like, a middle class neighborhood. But that's not it. What you need to worry about is this. Typically in most recessions or quote unquote depressions, you would see the wealthy snapping up luxury real estate. Okay. And for mostly not for depressions, but especially for recessions, you would see that, oftentimes, believe it or not, luxury products and sales of luxury products like high end cars, real estate, things of that nature tend to do fairly well, or they will be pretty stable. You don't see a cratering in high end luxury goods. You don't see that cratering. But now we're seeing the what's happening, and we've been tracking here at Rogue Money for quite some time, the implosion that is happening in the automotive sector. Okay, that even used car prices are starting to plummet. Hell, look, I'll be honest with you, Siege. This morning I was sitting there sipping my dark roast, man. I saw a beautiful 2002 BMW M5 investment grade, CJ. Investment grade. This car had 34,000 miles on it. It's a South Florida car. And I think it was like two owners, all in the family, all the service records. The car was investment grade, had 34,000 miles on it. They're selling it for 34 grand. I mean, people are getting desperate. I mean, this is a car that you snap up for 34 grand. Oh my God, that car in no time will be 100K easy, easy 100K in due time. But anyway, I digress. So anyway, with what's happening here with the luxury real estate, kind of like what's happening with car sales and whatnot, with prices coming down. Look at Manhattan. You look at high end real estate. In Manhattan, we've seen prices on multi-million dollars. I'm talking about a closet room space apartment that was like $2 million, now going for 20 to 30% less. We're seeing what's happening in the Hamptons, where the rich and powerful go to play. The Hamptons, okay, right here in New York as well. Their mega mansions are imploding as well. 20, 30% price drops. This is huge, okay? This is not something that people need to say, oh, it's just a normal. No, 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 no. There is something happening here with the prices in Manhattan. And there is a correlation to even the price drops that you're seeing in Toronto. Now, some people will say, well, there's no correlation, V. It's different banking systems and blah, blah, blah. But I'm here to tell you there's a reason why when American house prices took a dive, the real estate prices in Denmark also got hit. Why? Because they're all correlated. They're swapping each other's derivatives. Okay, they're holding each other's mortgage-backed securities, and they're just being sold throughout the world. This is starting to take it on its own crisis. Something is happening within the real estate market where these prices are no longer sustainable, especially CJ, the reality that we've said so many times before, that mortgage applications have the lowest they've been since 1965, a time when you only had 150 million people living in this country. The lowest it's been. And we've seen that money velocity is absolutely tepid. It's not really coming back. So these things are something to really, really zero in on, bro. It's something wicked is about to happen, brother.
Yeah, it is, V. And I didn't report this. It was, I think, when you were on vacation. But a few weeks ago, China announced that basically they were going to start cracking down, like on some of their fleeing money that was leaving the domestic side and all these foreign investments into housing, into a lot of what was fueled the U.S. Housing recovery. That in fact, it wasn't your average household persons. It wasn't the growth of U.S. households that were purchasing homes or first-time home buyers. It was in fact these big equity base, these big hedge funds that were purchasing, the housing
Yeah,
markets, not only with U.S. based money, but with also foreign money. And now we're seeing that
bingo.
being pulled way back.
Absolutely, man. And the whole thing is people like, there are people writing articles, oh, the hedge funds like Blackstone and Starwood are out there buying all this real estate. I think it's a great time for you to, buy some groupings of real estate and sell it to these firms. And there are people who have set up whole businesses to do that, to go ahead and buy these massive homes. Because look, folks, look, I told you years ago there's over 30 million homes of shadow inventory that are foreclosed on. I think right now we're looking at maybe 17 to 20 million homes that are still in inventory. In other words, the investment firms do not have the time nor the resources to gobble up all of it. So what's happening is you have private investors, they're getting involved, they're trying to chop up these real estate and sell it to these bigger equity firms like Starwood, like Blackstone, who are literally buying thousands of houses a week, CJ, thousands of houses per week in the hundreds of millions of dollars a week they're spending on property. Okay, so what's happening is the American dream is shifting. A lot of people are saying this because now you're not looking to buy a home, you're looking to right now rent a home from Blackstone or Starwood or any one of these groups that are connected to them. But the problem becomes, CJ, okay, because look, Blackstone and Starwood, they're buying these real estate properties. I mean, see, you and I both know they're not buying it because they think real estate's such a good investment, CJ. They're not doing that. They're doing it because they want to take the title, which is on MERS, and they're going to chop it up and make tens of millions of dollars on each title on the back end derivative market. They're
Boom,
financializing it, bro. Okay,
boom.
but what happens? What happens, Siege, when all of a sudden the bets go sideways? What happens when all of a sudden they're holding these titles to these homes, and now there's an implosion. There's a coming crash. There's a decline in these real estate prices. Now they're in trouble. You see, so it's a short-lived thing. I mean, there were pundits out there, articles putting out there, telling Americans to go ahead and it's a great time to go invest in real estate in the terms of buying it up and selling it to Blackstone or Starwood. How viable is that in the long term? It's not viable in the long term because what we're seeing nationwide is the jig is up. Okay, the main investor seats. You nailed it perfectly. The main investors were foreign capital. Okay, it was foreign capital. It was the Chinese money making the whole thing like honey. All right, but the Chinese money is out. It's out. All right, so if the Chinese money is out, and you got the two idiots like Starwood and Blackstone, which are really led by a really brilliant man, and I'm being facetious when I say that. All right, tongue in cheek. These guys are basically the two drunks that are left over in the party. Meanwhile, the smart people are already out. They're already out of the room. And you got Starwood and Blackstone. They're like by the punch bowl, and they're like, "This is a great party." And meanwhile, the DJ shutting down his turntables, turning the lights off. Everybody's leaving the room. Is just Starwood and Blackstone and a whole bunch of idiot investors who think it's a great time to be involved in this in the long term. This is what's happening, and the canary in the coal mine is happening. Dude, when you have prices, it's one thing, Siege, when you have a 3 or 5% turn. When you have 20 to 30% downturn in real estate prices, that's a serious problem. This is connected. This is connected, guys. I'm telling you, mark my words that I've said this. This is a huge thing because it is connected to the derivatives market and all the back-end bets that go along with that, especially with the interest rate swaps in which Blackstone and Starwood plays in, bro. And when these chickens come home to roost, look out.
No, you nailed it, man. You nailed it. That's absolutely correct. And then when you compound that with the fact that U.S. household debt is at all-time highs,
Yep.
it's just not a good formula, V. Not a good formula in any equation, unless you are one of those criminal banksters, and then it always seems to work to your advantage.
Exactly correct, man. And Siege, what is the current U.S. household debt for the audience?
Yeah, so again, U.S. household debt just continues to escalate. So the latest Fed report is that now household debt is at 12.8, almost nearly $13 trillion.
Wow.
Yeah, it's huge,
Wow.
and this is up $552 billion from a year ago, V. So and you also
Wow.
factor in the fact that on that debt, that 4.8% is delinquent on those credit cards, on those items. You can see that the average American household is tapped out. They're tapping on it, and I'm just amazed. This is after now, mind you, a couple of months ago, they actually lowered the credit criteria for homes, for
Yeah.
automobiles, for credit cards. I witnessed myself. Just it seemed like every day I was getting like 3 or 4 mailings with, get this credit card. You're pre-qualified for this credit card. I mean, they were just trying to flood the market right now with more debt to try to keep the U.S. economy afloat, and it's not working.
Absolutely. Absolutely. Is that whole Keynesian psychosis. Debt on top of debt on top of debt somehow magically makes all the debt disappear. It just doesn't. It's just, sir, we're drowning in debt. What do we do? Add more debt. It's the most stupidest thing in the world. Dude, if we ran our households the way that these quote unquote economists, okay, the way these quote unquote economists run a country or put out monetary policy, all of us would be bankrupted. You got to understand, 99.9999999% of these quote unquote economists are a bunch of idiots. They're a bunch of academians, okay, who had no real practical value in terms of they've never created a job, they've never worked a real job, they never created a business. All they do is in their books and they study theory all day until the theory drives them crazy. They're like nut jobs. Okay, it's a type of lunacy that these people have. Okay, the debt on top of debt on top of debt on top of debt on top of debt, and all of a sudden it'll make all the debt vanish, and you have this wealth effect, and you eventually become and Paul Krugman's a perfect example of this, CJ. You become like Paul Krugman. You become a guy who lives by himself. I don't know if he's married or not, right? But he looks like he lives by himself, and he has like a dozen cats, and he has this crazy look in his eyes, like he's been smelling cat urine his entire day. And he comes out with crazy ideas like, well, the way we can get rid of the national debt is just print a $1 trillion coin and pay it off. I mean, this guy's nuts. Okay, this is a Nobel Prize winner. Like the circle jerkers over at the Nobel Prize at the Nobel organization thought that Paul Krugman is actually smart. I mean, this is the type of insanity we're dealing with, and these are the morons making monetary policy, bro. And U.S. debt, yeah, 13 trillion and rising, CJ. And dude, they're saying what, almost 5% is delinquent. You know what that tells me,
Yeah,
CJ? The rest of them, at least a good 50 to 60% of them, are holding on to dear life. They're on the minimum payment cycle. Okay,
right,
it's
right.
crazy. It's only a matter of time, bro.
Yeah, just a matter of time, and just so that we can keep making it even more of a negative broadcast. No, I'm just
Oh
kidding.
man, I mean, we're on a roll with what's
Yeah,
going
we're
on
on a
in
roll.
real estate and
Let's just
debt.
keep
Let's keep
talking
rolling.
about. Let's just keep going. Let's talk a little bit around Dick's Sporting Goods and yesterday's outlook and guidance
Oh,
given on the retail industry. And we did witness last week where I can't remember the actual conglomerate that owns the restaurant chain, but Applebee's and IHOP announced that they were closing, several stores. And that was something that, Ken Shortgren Jr. at the Daily Economist forecasted, was that we'll see the retail bubbles burst first, and then we're going to start to see the restaurant industry go through the same thing. Yesterday, Dick's Sporting Goods stores basically completely missed comp sales, which is year over year sales. They missed their guidance that was given. Typically that's budgeting, what they're budgeting for. And unlike in the past few, you're starting to witness these big brick and mortar retailers just getting, raising the alarm bell, what's happening in the retail sector. So their CEO has came out and said specifically they feel that maybe Dick's is, overpriced. I noticed when I went the other day, and they have these new huge banners, and it's
yeah,
not going to work. It specifically says we'll honor any competitor pricing. So they're looking at their pricing strategy. However, there's a
yeah,
lot of disruptive things that are coming into play.
yeah,
These big brick and mortar retailers,
yep,
they no longer are being afforded the credit to carry the inventory that they've had in the past.
yeah,
The inventory levels in these stores, and it's so massive in that inventory. If you're not having inventory turns and you're having to pay on that inventory that's just sitting on the shelves, that's what's impacting these sporting goods stores. So companies like Amazon are coming up with these very disruptive direct buy programs from the
yep,
manufacturers. Nike has specifically been working with Amazon on a direct, probably imagine more of a almost like a point of sale that
yep,
basically Amazon's logistics would work. You buying on a front end and on a retail perspective, and that it would more than likely ship directly from the manufacturer, bypassing your brick and mortar. So
yep,
it's going to be interesting to see if how this works for Nike and Amazon, whether it becomes like an exclusive, and either it drives down consumer pricing, which is great for us. But there are just so many disruptive things occurring in the retail sector. Yes, it does have a little bit to do with online, but primarily it goes back to what we covered earlier regarding the fact that the debt levels are so high that people are deferring. They're wearing their shoes a little bit longer. They may be passing down their shoes from one son to the other versus going out and buying all these items that were once looked at as a
yeah,
necessity. They're no longer RV.
yeah. And people are looking for deals, man. I mean, look. Here's the deal. There's a few things that I go into Dick's for. Okay, like if I wanted to get something, but I really don't shop much at Dick's. Like, I mean, I like last weekend I went out and went to their weight training section because I like to throw around weights, and I picked up a back knobber for my back, which I had a hard time trying to find it anywhere else. But Dick's had it. I picked it up. Or I get like they got a good selection of like workout gloves, wrist wraps, things like that. In terms of sneakers, like check this out, man. Because I live in New York, I got so many of the factory outlet stores that are right near me. Right, I picked up a pair of Nike Air Force Ones Okay, beautiful Air Force Ones, which you could, wear with dressy with jeans and a sports jacket. They look gorgeous. These are on trend. They're beautiful, lightweight, comfortable shoes. And Air Force Ones are some of the most comfortable sneakers you could wear. I have like 3 or 4 of them. They are so comfortable. They're trendy. They look great in jeans. Love my Air Force Ones. Love them. Okay. And I picked it up in the Nike factory store. These are $150 sneakers I got for like 79 bucks.
Wow.
Okay. It's direct from the factory store. And these are not like leftover last year's. No, these are on trend. They just came out. They're gorgeous. Okay. So this is what's happening. And dude, the point you made with Amazon, where manufacturers are direct selling, cutting out the middleman. Okay, cutting out all the other crap. I mean, Dick's is right now going through the transition that Best Buy went through. Remember where Best Buy is like, you walk into Best Buy and then all of a sudden nobody's buying at Best Buy. They would go into Best Buy, they'd look at a price on a television, then they'll use their phone to scan the little code and see
Yep.
what Amazon's selling it for, and they'll go ahead and buy it from Amazon. And then Best Buy says, okay, well, Amazon will honor Amazon's price, and we'll honor Fry's price, and we'll honor H Greg's price, and we'll honor PC Richard and Son, and we'll honor all these other competitors. Okay, Abe's of Maine and whatnot. We'll honor these guys, and just buy from us. And that's what they have to do. So now, then Best Buy went from being Amazon's showroom, okay, into actually being a competitor. But in the process, how many thousands of stores have they had to scuttle? And the same thing's going to happen with Dick's. You cannot, here's the problem with Dick's. You cannot be going into Dick's and charge full price for Under Armour sneakers and gear that I know that I can go to Olympia Sports, I can go to Amazon, I can go to hell, even the Under Armour factory store and pick it up for a fraction less than what they're selling it for. These guys have this hubris. They're going to build these mega stores, and it's going to be just making so much cake. Now they have a rude awakening. They're going to have to scuttle stores. They're going to have to start doing layoffs. They're going to have to streamline, and they're going to have to start matching prices. It's crazy. And matching prices with the overhead they have, Siege, I don't know how well that's going to work out for them in the long haul.
No, they can't. Yeah, you're exactly right. They cannot do that, to their margins. I mean, hopefully they don't make the same mistake that like retailer J.C. Penney did, for example, when, because
How are they
Penny's
still in business? Can you explain to me how is JC
I,
Penney?
I am not sure how they are still afloat. It just must be strictly from maybe the relationships they have with like their vendor partners. I'm not sure how they're doing it. Now, one thing that did happen, I did go there. I can't remember specifically. I was looking online, and one of their recovery methods, which really hurt them, I went in, and I'm not kidding you, there were maybe in this big box JCPenney, I saw probably no more than like 5 associates. And the store was completely trashed. There were like 15 people in line for the checkout. I picked up the item that I was going to get, and I realized that these same people that were working the registers were also like running and retrieving products and exchanging and things like that. And I walked directly out. I'm like, you know what? I'm not going to deal with this. So if a big box retailer like Dick's takes on that type of mentality, they say, well, we just need to slash labor. They just can't do that. Their box is just way too big. They start discounting. Their margins go down even further. It's just going to be a very challenging battle for them against some of these online retailers in the transition that we're seeing.
Yep, absolutely correct, man. Absolutely correct. Our buddy Charles Hugh Smith has a great article, Why We're Doomed, Our Economy's Toxic Inequality, man. Why don't you break that down for us, Siege?
Charles is traveling a lot this month, so he's not going to be doing his monthly show that he does with us, but he'll be back in September. So I just want to highlight, Charles puts out some amazing work at Of Two Minds, so I just want to continue promoting his work. And he wrote a great article, and it's titled "Why We're Doomed: Our Economy's Toxic Inequality." And this specifically has just one chart that kind of visualizes from the 1980s in terms of where lower household incomes were and how they grew through that period. And by far, when you look at the 80s and you looked at the income disparity that occurred, you saw significant growth in lower household incomes. Now, however, when you fast forward that, to where we are today, it's like a complete opposite paradigm. It's completely reversed. We're basically seeing the middle class, the lower income disparity, the inequality continue to go down, while the top 1% has achieved all new super wealthy, and they continue to gain those. Specifically, why you said earlier regarding all these, all the debt trades, all the things that they do that pushes up, inflates the prices for us, but yet they garner the profit from it. V.
Absolutely, absolutely. And it's very true. Next, man, we got the Libyan faction leader Haftar. Khalifa Haftar travels to Moscow, and this is huge news. And while everybody was focused on Charlottesville with a scant little tiny group of white supremacists, I mean, what do you expect when you have Antifa? You're gonna have the opposite end of the spectrum. You're gonna have far left, and you're gonna have the far extreme right. But who cares? It's a distraction issue. I'm not losing sleep over it, and neither should you. Bigger thing here is something that we've been tracking for quite some time. Khalifa Haftar. Who is Khalifa Haftar? Well, he is the main guy in Libya. And if you don't know about Libya, you kind of forgot about Libya because Syria gets all the attention. Let me give you guys a quick little recap. Libya, since Hillary's, we came, we saw, he died.
Yeah.
That whole thing, that cackling witch, okay? That cackling witch. After that whole shenanigans and the complete blunder and policy failure that Libya was, Libya is right now split into three factions. One of the factions is supported by the U.S. government. Okay, it's very loosely, not doing too good of a job. The other faction is this radical Islamist group. Okay, and the third faction, the most strongest faction, is actually led by Khalifa Haftar. Khalifa Haftar is somebody who has helped. He's a general. He has the most amount of guns and most amount of guys, the most amount of strength, in Libya, because in Libya, it's basically at this point, CJ, its power comes from the barrel of the gun, and Haftar has all the guns. Okay, thank God. The reason why I say thank God is this. Haftar's a moderate guy. He's a secularist. He loved Gaddafi. He was the main guy back in 1969 that helped Gaddafi gain power, okay, in that coup. He was the main guy that helped Gaddafi. He's Gaddafi's best buddy, his right-hand man, the whole 9 yards. So Haftar, after winning, after seeing his country in absolute shambles since his foreign intervention, seeing the backstabbing of NATO, the backstabbing of the West, the backstabbing of that despicable piece of shit called Hillary Clinton, okay? Haftar went out and stabilized his country, and now he's looking for help. And instead of looking to the U.S., where did he go? He went to Russia. And why? Because Russia has always helped Libya whenever Libya needed. Russia helps any country without trying to backstab them and say, hey, you know what? If you don't give us your oil, we're gonna do a coup against you. None of this crap. Okay, none of this deep state circle jerking wonder boy garbage. Right? So Haftar's in Moscow. He's getting help from the Russians. Okay, Libya will swing towards the east. They will be integrated into this new energy paradigm. They will not transact in the dollar in the selling of their petroleum products. Watch that occur. This is in lockstep with the Saudis and what's in the larger game in the Middle East, where the entire OPEC will no longer accept dollars as settlement for oil. That is right around the corner, folks. The petrodollar will die. It will die. And I'll tell you right now, and I've broken this about a year and a half ago. I said that Syed Gaddafi and his sister Aisha Gaddafi, Syed's out of prison. He's no longer in The Hague. And I said that Syed's out at least 4 or 5 months before they made it official that, oh yeah, Syed's been released from prison. Well, Syed Gaddafi's out. He's the son of Muammar Gaddafi, the oldest one, and Aisha Gaddafi. She's out. She's out as well. She's been out. And what they've been doing, what Aisha's been doing, is been prepping the people. Haftar is prepping the people. Okay, Haftar is going to help once Libya is stabilized. Haftar and Aisha Gaddafi are going to help bring a new Gaddafi to power. Syed has already been given the blessings of a lot of power brokers, a lot of power players, especially in China and in Russia, has already bestowed their blessings on Syed. You're going to see Syed Gaddafi come to power. The son of Muammar Gaddafi will take the reins of power in Libya. Khalifa Haftar and Aisha Gaddafi are paving the way for that to happen, and you've heard it here first, folks.
Yeah, I specifically remember that broadcast. Yeah, that was a long time ago that you called that one out. So yeah, so good, Very, very good intel.
It's happening, my man. It's happening. CJ, Saudis are leaving Yemen, bro.
Yeah, just major shakeup. We covered last week in regards to the leaked emails that came out in regarding the fact that Mohammed bin Salman, the heir to the Saudi throne, had basically confessed to U.S. officials that he wants out of the Yemen war. Now, I think this was what could be fueling some of the inner turmoil that you're seeing there in the kingdom. However, if bin Salman is willing to exit the Yemen war and the destruction that's occurred there, V, that's a good sign. That's a good thing.
Yep, absolutely, man. Absolutely correct. And with that being said, buddy, we are at the end of the broadcast. Again, folks, hit the subscribe button, hit that notification bell, because you might have to do it several times. But show your support and your love for us, this group, the work that we put out. Check out roguemoney.net. There's a lot of awesome articles out there. Great writers, great intel, great information. Gives you a nice global perspective. We're the only ones that do it the way we do. So check out roguemoney.net, and also check us out on Twitter at the Rogue Money. And follow us on Facebook as well, and every other social media platform known to mankind. And check out our sponsors, myfreedomnow.us and mygoldusb.com. With that being said, CJ and I will return back at 1 p.m. Eastern Time with the main man, the wild man from Cali, aka Big Swear. With that being said, CJ, we're over and out. Take it away, my man.